Hello everyone. Today we'll learn about basic concepts in accounting. So there are total 9 concepts, but I will not teach all the 9 concepts in one video because it will become a long video. So in this video we'll learn about 2 concepts and then the 7 concepts in next videos. Okay, so first concept is transactions. So what is a transaction? When there is an exchange of something between two persons, it is known as a transaction. Okay, when there is a give and take of something between two people, it is known as a transaction. So I go in a grocery store, I purchase whatever groceries I need, and then I pay money instead to the shopkeeper. Okay, so that is a transaction. Now there are two types of transactions. One is monetary and other is non-monetary. What is monetary? When there is money included in that. So the examples of monetary transactions are cash purchases, cash sales, payment of expenses and receiving of incomes. So as I said, cash purchases, I go in a grocery store, I pay money to the shopkeeper. So that is that includes money. So it is known as monetary transaction. Similarly, for the shopkeeper, it was a cash sale. Okay, because he sold the goods to me and he received money. So it is cash sales, that is also known as monetary transaction. Third one is payment of expenses. So I pay expenses, for example, say rent or electricity bill or whatever. So it includes money in that. So that is monetary transaction. Last one is receiving income. So I receive something, some money. So that is a monetary transaction. Okay, so even if you go in a bank and you deposit money in the bank, it includes money, right? So that is also a monetary transaction. You withdraw money from the bank, that is also a monetary transaction. Now non-monetary, as I said, monetary includes money. This is the opposite of monetary transactions. So your money is not included. So in barter system, what used to happen? I used to buy rice, I used to give wheat. So that used to be a monetary, non-monetary transaction because it did not include money. So here are some examples. First one is hiring employees. Now you will ask, your money is included, right? Because you are going to pay the salary to the employees. But are you paying the salary right now? You will pay it when the time comes, like after a month or so, you will pay the salary. So that is a non-monetary transaction as for now. Hiring employees is non-monetary transaction as for now. When you will pay the salary, it will it will come under monetary transaction. Okay. Second one is credit purchases. So as I said, I went in a grocery store, I paid money. So it included money. That's why it was a monetary transaction. But if I uh, I would have purchased groceries and I did not have money, and I would have told the shopkeeper that I will pay you in the future. So that is a credit purchase. Okay, so that credit purchase will be non-monetary transaction. At the same time, for the shopkeeper, it was a credit sale. So credit sale is also a non-monetary transaction. And using personal assets from business. Okay, you are not withdrawing money from your business. You are using the assets from your business. Okay, so asset is not a money, right? It can be money, but here you are not referring to money. You are referring to something else like machinery or furniture or whatever. So that will be a non-monetary transaction. So this was your one concept of transactions. What is a transaction? It is an exchange of goods and services between two people. You are giving and taking something in return. So that will be transaction. There are two types of transactions. One is monetary, second is non-monetary. Monetary includes money, non-monetary does not. So let's move on to another concept, that is capital and drawings. So what is a capital and what are drawings? Capital refers to the money or assets invested by the owner in the business. So I want to start a business and I will of course need money for that transaction, for that business. So whatever money I will invest in the business, that will be known as capital. It represents the owner's stake. So I'm staking my money. Okay. Tomorrow, if I incur losses in my business, so it is called a stake. So that stake is the owner's stake, which is known as capital. Then second concept is drawings. It refers to the money or goods withdrawn by the owner for personal use. So tomorrow, I've started my business and I require some money, or I require any asset from my business. Okay, say for example, I don't have pens for my, like, stationery I don't have, so I'm using the stationery from my business. So that are drawings. I require money, I withdraw it from my business, then that are drawings. It reduces the owner's capital in the business. Why it reduces my capital? Because whatever capital or the money I had invested in my business, I am taking money from that only. Na? I am using my assets from that capital itself, right? So my capital reduces when I draw something from my business. What is the impact of drawings now on my business? So it reduces the capital, as I said, it because I am drawing something from my capital that I invested already in the business, it will reduce my capital. Second one, it affects liquidity. So liquidity, like my payment, whatever I will do, it will affect my liquidity. So if I have to pay some money to the creditors, say, then I'll not be able to pay because my capital has been reduced now. So tomorrow, if I have to pay something to the creditors, I'll have to pay it from my pocket. So my personal, whatever pocket I had, whatever money I had for my personal use already, I'll have to pay from that. Okay, and my business, the drawings, due to the drawings, my capital has been reduced. So it's going to affect my liquidity. Third one is not considered a business expense. Why it's not considered a business expense? I'm not paying out of the business. Okay, I am the owner. If I'm paying something from the business to somebody else who is not included in the business, then it is an expense. Okay, here the owner itself, that is me. I itself is withdrawing something from the business, so it's not a business expense. Okay, however, it's considered an equity. Okay, so whenever you will learn how to prepare balance sheet, I'll tell you from the capitals you have to subtract the drawings. Okay, now let's take an example for the capital and the drawings. So capital, business starts with rupees 1 lakh. So I invested rupees 1 lakh in the business to start my business, so that is called capital. Okay, capital helps you to start up your business. Capital helps you to spend money for your good, for your business is good, for example. So that is a capital. Now when are the drawings? Now I require rupees 10,000 from my business, so I withdraw rupees 10,000 for my personal expenses. Okay, I want to pay for my education fees, I want to pay my electricity bill, for my personal electricity bill, like my house. So that will be called as drawings, because I am withdrawing something from the capital. Whatever I had invested in the business, I will be withdrawing my money from that capital. So it will reduce my capital. And I hope you all have understood this video, and thanks for watching the video. Please like, share and subscribe.